Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't, and give me a follow. And just want to do a little disclaimer before, this is not to be construed as financial advice. This is just my opinion on the markets and what's going on. Nothing should be construed as financial advice. Read the further disclaimer below. So let's get into today. I haven't been able to do a video due to my personal issues, my personal life, I mean, not issues. Personal life, I don't have issues. And yesterday I had computer issues and that happened. It automatically shut down and I was unable to finish. So anyway, let's get in the economic data today first. Business optimism index, that was up today. I I went over this. I was doing the video yesterday, but much of since I did the video was a nothing burger. Monday consumer inflation expectations the same. There was good news because the PPI that finished lower than expected. 1% month over month, year over year, 2.4%, below 2.7% year over year expectations, and 2%. So you see, generally, that's a the market's going to view this positively. And if you look at it today, I want to talk about the market. The market's up 400 points. S&P's up 90. And yeah, that's generally, let me keep good. But if you actually look at the actual numbers, like we were talking about this, the Dow has not been able to break that 40,000 level. It's been over it, but it hasn't broken because it's now below it. And today was a 400-point gain. It still has over 200 to go. The S&P, same level it was. We've been talking around 5,400, went down to 51, moved back up, and the economic data hasn't really been breaking for all that much. So anyway, market's going sideways. Doesn't look all that great if you turn out the noise. Uh, could be up for one more run, but it's really getting trouble. And all these rate cuts, if you look at it, let me see the CBOE. I'm trying to go to the 10-year. The 10-year interest rates. You look at it, interest rates, look over a 6-month time frame. You look at since April of 2026, when it was 4.6%. Now at 3.85%. Interest rates have gone down. So you see a lot more refinancings going on. I wanted to do more. I'm going to catch up on the articles because I think they're very important. So anyway, and of course, gold, you see it, it's 20 above that 2,400 mark. It's ready to make that mark. I think silver will follow, go to 50. I'm still confident. You see a lot of people turning bearish. I saw one precious metal advisor, or not advisor. I saw a bunch of precious metals newsletter writers turn bearish or worried. I think that's a positive sign. Down today because of the strong economic data. Gold almost exactly correlates with economic data. I know that from being a bullion broker, just seeing it almost exactly. And I mean actual economic data. Inflation influences it too, but actual economic data. And if you've watched this video, you can tell that gold, it core if there's a strong economy and a vintage of strong economy, then inflation will deal worthless because all that printed money will just go to the Dow, the S&P. But if their views as a weak economy like 2003 through 2010, gold will do well. Or in the 1970s, inflation slash stagflation. But like the 80s, the 90s, and the 2010s, if you look at it, 2011 is when the unemployment rate peaked, and that's when gold did. So, but this is viewed as good. So anyway, let's get into a couple of things. And this just goes to show, look at this. This is great news considering all that Pfizer has done. Today it was up. So if you look at it right here, streak has ended, but Pfizer trades in the red for 7 straight days. It's on $28. If you actually look at the 6-month chart, Pfizer sort of, but if you look at like the 10-year, you look at this 10-year right here. Pfizer at one point in 2022, geez, wonder why, was at $58, and now it's really gone gone down, and it will probably continue. They've destroyed their brand by, what they've done, and all the bad things they have done. They've destroyed their brand. So I think this will continue despite the government contracts. This will not do well. So anyway, not investment advice, just my opinion, but it does have a branding problem, and it should. It's done a lot of bad things. Uh, so anyway, that's Pfizer trades in the day. So, and then the other one, whoever says bankers don't like gold is just a liar or an idiot or a sheep, but not a mainstream sheep, but a sheep in the other way. Look at this. Let's see what Wall Street has for gold. Let me just do a quick video. Looking at this, I think they're literally, see, look at this. Prices have hovered 2,400. Like I said, it's building that base to make the next move up. My opinion, not investment advice. But Wall Street may be listening to this channel because now they're starting to Citigroup price target of $3,000. So there it is. Citigroup bullish on gold. Bank of America, gold could reach 3,000 per ounce next 12 to 18 months. And then Goldman Sachs, which is a little less bullish, but they think gold's going to go to 2,700. So China's market shows structural. Yeah, China has the main reasons are the economic data. It's the U.S. is the world reserve currency. It's mainly a U.S. trade. Gold and every other currency's gone up for basically since 2013. So anyway, that's what I say. You look at it. Let me see. But yeah, that's what it is. You look at it, Wall Street is, and I remember in 2013, right before that, Goldman Sachs actually said gold was going to have a bad year. I still remember that, and I thought they were crazy. I remember that because I was working at a bullion dealer and we were making fun of them at the time. So this, you're not going to hear this, but this is very bullish. Goldman Sachs predicts 2,700, so that actually makes me feel good. Bank of America, I don't know what their track record is on predicting gold, but they think it's going to be 3,000. Citigroup, 3,000. Wall Street loves gold. What can I say? So that's the first. The last thing I want to get into is the junior mining, and I don't really talk about this too much. Well, a lot of junior miners have been bombed out, not doing well, and I think a lot of these companies, senior, mid tier, are going to be smart to buy these, even if they're not fully de-risked, because they're so cheap in terms of ounces in the ground. I'll just use one example. I'll do Lion One Metals because they're close to production. You look at it, this is a company right here that it's one mine, but it's coming close to production. You look at it in 2020, this was about $1.79. 2000, let's just do max. In 2011, this was actually during the bull market, 196. Then it went down. In 2015, when gold was around, this is around 18 cents. Right now it's 23 cents. This is when gold was around 1,200 bucks. A lot of these juniors are being still priced in. Now there is dilution and cost, but they're still being priced in at very low prices, while a lot of these companies, and Line One Metals is still a much better company. 2020, it was at $1.79. So you're gonna look at that. And a lot of these companies, they're gonna start getting bought out because they have to replace existing production. A lot of these companies, and you're starting to see it here. Those Goldfields buys Osisco for 1.6 billion, all cash deal. And you're going to see this more and more. South Africa is buying gold as Cisco Mining in a deal 2.16. Now, just for disclosure purposes, I own a Cisco Mining. I was down on it August 11th or August. Yeah, yesterday. Yeah, yesterday was Monday. So today, I'm not talking about Junior. I do want to have a newsletter maybe one day or work for one. I'd love to and write about these stocks. I will charge for those, but these I'm not going to talk about on YouTube because I don't want to. I'm not giving investment advice. I don't want to go in that realm. But I do own a Cisco Mining, and I'm up now a good amount. I was actually down on it, last week. So this is one reason I'm not giving you advice, but I don't really. I mean, if I'm confident in the company, even if I'm down like 25, 50% in these juniors, sometimes I won't sell 'em. Generally, I have a lot of royalty streaming, mid tier, uh, junior producers, junior explorers. So I have a lot diversified, but some of these, because they're not huge amounts of portfolio, and I'll use it to offset gains. Personally, just what I do, not investment advice, not saying you can do that, but I'll keep them because then one day you might wake up and that junior that you were deep in the red in, now you're in the green. And this has happened with another company I owned recently, Asenio Resources, where I'm up now by a good amount. So I think this is what's going to happen uh, as this gold price persists. They're going to, and these junior minings are going to get bought out. You're going to start seeing teams like Goldfields. They ended up buying a Cisco Mining, 2.16 million. And let's just see what happened to a Cisco. So Cisco Mining, I'll just use the pink sheet. We'll do a 5-day. If you look at that right there. It was at $2.12 and it went up $3.49. That was up. That's up a lot. Look at it on 5 year. This was anytime you bought it. If you bought it even at 347, you're up 349. All cash. Actually, not anytime. If you bought in 2017, you would still be down, uh, but yeah, if you look at this, let's just go back to 5-day. Wow, went from $2.12 to 3.49. That's significant gain within a day, and I think you're going to start seeing that more and more because a lot of these companies they got to decrease product. They got to replace their existing productions. These stocks are stupidly cheap right now, but and that's why. So, but the other thing is what I want to say in terms of the gold, uh, I would say junior mining. If you are going to invest in it, one, make sure it's your own decision. If you're doing it because someone else buys something or someone else does it and you're going to get mad if you lose, don't do it. To consult a financial advisor. You've got to do that. These are not for the weak at heart. These this involves risk and more so than any other type of investing. And also find some sort of newsletter. Find a newsletter, someone you can like and trust, and don't just sign up for any. Follow the person, see what they offer publicly. If they have a channel, YouTube channel, if they write free articles, follow that person for a while before you get into it. Because don't jump into this immediately because it's not for the faint of heart and it's very risky. So anyway, that's all. In terms of the market, that's if you look at my prognosis, it's gold's basing maybe till fall. It's not going to start making a move The economic data is not weak enough yet. It'll either be inflation heating up in the fall or the economy declining. Doesn't mean gold's going to go right away. The economy could be declining and then finally forces the Fed a hand to really reverse course. And then that's when gold's really going to make its final up leg before it falls, forms probably a multi-year top. And then I don't think the bull market's over, just be gone for 1 to 3 years. Because I see a lot of deflation eventually coming in the future. We'll see if I'm right or not. Doesn't mean I'm right, just my opinion. But if you listened all the way through, thank you. Hit that like button, subscribe. I'll talk to you later.